You know that feeling where you're all excited about buying a home, but in the back of your mind, you're thinking, what if I accidentally do something that blows up my mortgage approval? That quiet little panic is exactly what we're going to try to calm down today because there are 5 really common mistakes first time buyers make when they apply for a mortgage. And if you can just avoid these, you put yourself way ahead of the game. I'm Ron Pippin with Strategic Mortgage, and I spend my days walking first time buyers through this process so I see the same patterns over and over again. The same, I wish someone had told me this sooner moments. And there's good news. This is all fixable and it's all avoidable. I even put together a simple guide that lays all of this out in plain English so you can keep it by your side as you get ready to apply. If you want that, just comment guide below and I'll send it to you. So let's talk about the first big one, skipping true pre-approval and just winging it. A lot of people think they'll start house shopping, fall in love with something, and then figure the loan out later. Or they do a quick online pre-qualification that doesn't look at documents and think they're all set. The problem is, once we actually start seeing pay stubs and bank statements and credit, the numbers can look very different from that quick estimate. That's when people find out the home they've been dreaming about is outside a comfortable range, or that something on their credit needs attention. Real pre-approval, where you actually share documents and get a realistic budget, is the foundation. It tells you what price range makes sense and gives you a letter that sellers take seriously so you're not just guessing. The second mistake is ignoring your credit until after you apply. The credit report is one of the main tools a lender uses to understand how you've handled debt over time. If you haven't looked at it in a while, there could be old accounts, small collections, or even errors that you didn't even know were there. And those things don't usually fix themselves in a week. Checking early, even before you're officially applying, gives you room to clean things up, pay off little surprises strategically, or at least go into the application with your eyes wide open instead of being blindsided when we pull your credit. The third mistake, it's a big one. Making large purchases or opening new credit during the process. This is the classic story of, I got all excited and bought furniture or a car before closing. From your point of view, you're just getting ready for your new life and your new home, right? But from an underwriter's perspective, those new payments count against you. They increase your debts compared to your income, could lower your credit score, and that can push your file from a comfortable approval to this is tight or even this no longer works. The safest rule is this: from the time you're getting serious about pre-approval until you close on the home, don't take on new debt without talking to your loan pro first. Fourth, moving money around without a clear paper trail. Lenders don't hate you, they just have to show where your money comes from. When you transfer funds between accounts, deposit cash, or accept big help from a friend or family member, we need to be able to explain that clearly with statements and letters. If you're constantly shuffling money because it feels more organized to you, it can actually make things way more complicated on our end. A much better move is to pick the account or accounts you'll use for funds for closing. Park the money there and talk to your lender before you make any big deposits or transfers so we can tell you what documentation you'll need. The fifth mistake is making major life or income changes in the middle of the process without looping us in first. Changing jobs, switching from a salary to commission or self-employment, co-signing on a loan for someone else. These are all big deals to an underwriter. Stability is huge in lending, so when your income type changes or your obligation change, it can trigger a whole new round of questions. Sometimes a job change is unavoidable, or even a good thing, but the timing matters. Before you say yes to a new position or sign for someone else's loan while you're in the middle of a mortgage, have a quick conversation with your lender so you understand how it might impact your qualification. Now imagine the opposite of all that chaos. Imagine you get pre-approved with eyes wide open. You keep your finances calm and predictable. You know exactly which account your funds are coming from, and every step of the way, you're checking in before you make big moves. Underwriting becomes more of a formality than a fire drill. And when you sit down at the closing table, you're not wondering if some last-minute surprise is going to pop up. That's what I want for you. A process that feels boring in the best possible way, steady, transparent, and under control. If you want help simplifying this, I put everything we just talked about into a guide you can skim in a few minutes and refer back to as you get ready to apply. Comment guide below and I'll send it to you. And if you're already thinking about the next steps and want to talk through your specific numbers and timeline, you can always go to talkwithron.com and grab a time to chat with me. In the meantime, tell me this. What's the one money move that you're most nervous about making right now while you're getting ready to buy? Go ahead, drop it in the comments, and let's take the mystery out of your home buying.